Welcome to the Inside Startup Investing Podcast powered by KingsCrowd. As always, I'm your host, Chris Lustrino. From discussions with founders and VCs to industry experts and special guests, we want to provide you with the inside scoop on all things startup investing. Whether you're investing $50 a deal or $500,000 a deal, we have the stories you need to hear before clicking invest. From the metaverse to spaceflight and beyond, join us as we explore the world of startup investing for all. And now, on to this week's episode. Hello, everyone, and welcome to our latest episode of Inside Startup Investing. Today, we are joined by Arlan Hamilton, our partner and founder of Backstage Capital, as well as many other endeavors that our listeners probably are very much well aware of, including Runner. On this episode, we are going to discuss how KingsCrowd and Backstage are teaming up to do something really unique with our latest partnership. If you're interested, stay tuned to learn about what we are doing and how you potentially can get involved. Arlan, thank you so much for being here as always.
Hey, Chris, thanks for having me.
Of course. So, as you know, we already have a partnership in place and we love collaborating. But we've been going back and forth on this latest venture for the past many months. But I'm really excited to share with our listeners. So first off, before we get into that, can you fill in folks on how things are going at Backstage Capital and what you all are up to with your latest fund that you're raising?
Sure. So we're a 3-partner team. It's Christy Pitts, Brittany Davis, myself, which has really been amazing working with them for the past several years. And I think finally kind of coming into our own a little bit here. And it's towards the end of the year. So we've made just about all of the investments from previous funds that we are going to make this year, which is why this is really exciting too. We are raising a couple of funds. So one is the Opportunity Fund 1, which is a $30 million fund with mostly institutional backers. And then we have an interesting fund that I think we're going to talk about here.
Awesome. And that institutional fund, from what I can gather, you're going to be going a little bit more late stage and investing in companies more in that Series A, Series B territory. Is that correct?
So we've already started investing. We have LPs like Bank of America, Comcast, and others. I'm an LP myself, a large amount. We've already started deploying this year, which has been really great. So there have been some incredible announcements made about some of the ones that we can announce, like Career Karma and Mommy. We're talking about, anywhere from $10 to $50 million raises that we're finally now able to get into. And what makes this special for the op fund, which is a publicly raised, that's why I can talk about it, which is, our language, right? But what makes it really special is that for the most part, it is investments in companies we've already invested in. And we love making those early stage, pre-seed, almost friends and family investments, 25K, 50K, 100K. That's been our bread and butter for the past 7 years. We make those investments. We treat it like we've invested $1 million or more. And then they come to us, these founders, they come to us when they're going into these bigger, when they've found success and coming into these bigger rounds. And so we can put in now $250, $500K or $1 million from our new larger fund into these companies we've been tracking and working with for years. And so those early stage checks that were our bread and butter are still so important, massively important for the ecosystem of Backstage.
Absolutely. So I want to hit on one last question about this new fund, and then we're going to get into the fund that we're collaborating on. So in this new fund, talk a little bit about how you think this will help continue to solve this massive funding gap that we still see for, overlooked, underestimated founders.
Yeah, I started Backstage officially 7 years ago, but it was really a decade ago trying to figure out this gap. And, unfortunately, a lot of it's still the same. A lot of it, there's so much money that's poured into venture capital. And so pound for pound, BIPOC founders, women founders have more capital flowing to them, which is really a good thing. But we still need to catch up when it comes to like the disparity in the percentages and like the demographics. And so this, before we were putting dollars to work and several companies. Now with the op fund, we're putting more dollars to work in fewer companies. But the idea is that this first $30 million, $50 million op fund turns into 100 million, 200 million over the next few years. And if we can be an example of a small fund by an emerging manager, and by emerging managers getting really, really big, having a lot of assets under management, then that we know from experience that example causes a lot of really great copycats, and we love that. So for instance, with our model 7 years ago, 6 years ago, 5 years ago, people were saying I was crazy for making all these investments in these small investments in lots of companies, 30 or 40 a year. You're deploying $1 million, $2 million. And now you see in the last 4 or 5 years, an explosion of funds, and many of them I'm an investor in, right? I'm an LP in, of funds who make those types of investments in some underestimated group, whether it be by demographics or it be, location or certain niche industries. You see that. And so I believe that if we can then be another example, one more example, it's a long road here. So it happens every few years. But if we can go from 20 million to 200 million in, say, a 3-year period, then that just goes to show, and we have these receipts to back it up. Like, look at all these deals that nobody really believed in at the beginning, and look how they're exploding. Then I think that will set some example. You also have a lot of LPs, like larger LPs, coming to Backstage, coming to us and saying, we've been doing things the same for decades or for years. We know we need to do a little bit different. We know we want a little bit of change. They see how underrepresented, underestimated founders react in a downturn, economic downturn. They like it. They say, oh, there's a lot of resilience here that I'm able to see in real time. How do I make sure that I'm backing that? And those conversations are getting much, much more interesting than they have been.
That's fantastic. And if you think about it, you're right. What you did for the super early stage markets, now you move upstream, then we have 5 or 10 other 200 million, $300 million funds in 5 or 6 years. That's real money. That starts to make a difference.
There's definitely a missing piece in that Series B plus. And then you have really amazing funds like what is it called? Base 10, I think is what it's called. $1 billion under management, run by a Black man. You have Olin at Motley Fool Ventures. He has 200-300 million already under management and growing and growing. Those were examples set for us. We can then, with our ability to amplify messages. I mean, I think Backstage has a very special ability to get the word out, about things, even because some people have not heard of these $1 billion funds, but they've heard of Backstage's 20 million. So It's really it's not just Backstage winning when we win. We get to share that with so many other people, whether they realize it or not.
Phenomenal. So now let's talk about, obviously a big part of Backstage Capital's identity to date has been those really early stage, early day companies. And you have a fund, it's called Flex Fund 2, I believe, that you've been investing out of. There's some really interesting portfolio companies in there. And I'll just take a minute to talk about the fact that we're now partnering up on that fund to help continue to build out that fund. So what we're going to be doing at KingsCrowd, as you all know, is we source our deal flow right from the online private markets, your Republics, your WeFunders, your Start Engines. And then we utilize data to actually score those companies to identify companies that we think will perform well over time. And what's really cool about that is it allows us to literally partner up with someone like Arlan and Backstage Capital and create this collaborative data-driven fund product. And so we are going to help find new deal flow for Flex Fund as they continue to fill in the portfolio at Flex Fund 2. I think it's really unique. This is the first time that we're truly converging these two worlds, the online and the offline, and coming together. But Arlan, would love to hear a few thoughts from you about it.
Well, I just think it's great. I think it's we have been manually making decisions. We've seen more than 10,000 companies. We've invested in more than 200 now. And it's incredible to say that. Wow. Just thinking about where we came from, how Backstage was started with zero, started with nothing, 200 plus companies now. And you're always thinking about, or I'm always thinking about innovation, always thinking about to what end, what next, right? And so the idea of we've been fans of KingsCrowd for however long, it's no secret, and just kind of taking that and blending the two ideas together is really exciting to me, because it ultimately will benefit so many founders, and it'll benefit the people that you and I, Chris, have a great deal of affection for, which is that aspiring or new investor. Why should VCs have all the fun type of thing, right? So it's like, it's just a really cool combination. And I mean, even to give it a even better example for me, I used to wonder if any of your audience is familiar with Product Hunt, Ryan Hoover, cool guy. But I used to wonder, why doesn't Product Hunt have its own fund? Because it's seeing all this cool stuff. And the way you all work with these retail companies that are getting crowdfunding, to me, it's in that league. It's like you're sourcing the best cream of the crop. And now you're able to do that with these funds that you have. It's just really cool and interesting, and I think mutually beneficial. And I think I also always have to give it to somebody who's like really putting their time, effort, and money where their mouth is, rather than talking about diversity or talking about this. You see, in my opinion, and you can correct me if I'm wrong, but it seems like you see diversity in investing just the same way you see diversity in investing as it's used in the investment world. It's not like charity. So diversity of demographics is like the same thing. You want to invest across the board. You don't want to be missing out on something. It's not like, oh, we're doing this heartwarming thing together, and aren't those nice founders going to feel great, warm and fuzzy? So it's like, actually, we're joining forces, and we're going to, because we're joining forces, be able to get into deals that both of us may not have been able to get into before. Yeah. That to me is really exciting as an investor.
And it's like, it's truly like, I can't even, like, overlooked is such a good word, because I love looking at like how funding just literally goes through 3 cities still in the US, right? Like 90% of funding. And then you just look at our industry, and it's like every state, and it's like, oh my God, we are finding companies that people just literally are not even taking a second to look at. Yeah. And it's like, that's an amazing company with great fundamental. Like, how do we not invest in that company? So I love it. And one of my favorite things was when we looked at kind of the key terms for the Flex Fund, we were literally able to turn on a filter for each one of the criteria, and then come to that universe in almost no time at all. And then we just add in, okay, and we only want it to be 4 or 5s on our rating scale. And now we come to our universe of like, here's the deal flow, Arlan, this is what you need to look at.
Yeah. Can I tell you how important that is? I don't want anybody to miss this. A lot of times, especially and I'm just kind of educating, if you don't know, if you do know, tune me out for a moment. But a lot of times founders who are BIPOC founders, people of color, women, LGBTQ, et cetera, they may spend 45 minutes of a 1-hour investor conversation simply trying to explain themselves to the person on the other end, who is usually, this is just usually, a white man. Now, just take away anything, it's not political or anything like that. Just take away how ridiculous that is. And the fact that, like, imagine whoever you are, if you had to spend 45 minutes of a 60-minute conversation with someone you wanted to be in partnership with, trying to explain why you chose what house you live in, why you chose your partner, why your kids go to the school they go to, et cetera. That's kind of akin to what we have to go through. Why am I having this conversation while pregnant? Why does my hair do this way? I've had these conversations. So what we're doing is taking all of that bias out, that we all have, by the way. Every single one of us has some bias. We're taking that out of the equation, and we're making it about the proof is in the pudding. The proof is in the metrics that we're able to measure. People who love being able to measure and look at data and facts will love this, and I love this, because it doesn't have to be about your heartstrings. It has to be about, okay, overlooked, let's go over in that world of the underrepresented, underestimated, and then within that world, let's put them all on the same level footing and see how people measure up. And then let's invest in what we believe, based on those metrics, are the best the most probable for having success.
Mm-hmm.
I mean, that to me is like what being an investor is about. And how cool is that?
Awesome. So this is up to a $3 million fund. One of the things I really want to hit on is the really low minimum. Can you talk about how much the minimum investment is to go into this fund?
Yeah, so we as you said, we have been making investments. We also have plenty of investors. So the minimum has been 10,000. We wanted to make sure it was accessible to as many people as possible. You do have to be an accredited investor, not our rules. And we certainly have other ways that we talk to unaccredited investors, but 10,000 minimum. Very hard pressed to find a venture fund that you can get into at that minimum. I'll do up front. So no capital, just one capital call. But yeah, it's just easy to track.
Awesome. So we're going to be making that fund available to all of our customers who are accredited, $10,000 minimum, and you get to invest alongside a portfolio of really amazing companies already. And then we'll be adding several new companies, hopefully in the coming months and years, that will go into that fund as well, that, like we said, fits all of those criteria that Arlan and her team have put together, and then blending that with utilizing the data that we have to identify other interesting companies to go into their pipeline, which I just think is really, really cool. And something that we're going to be working on in the coming months and sharing with all of our LPs is actually a portfolio management tool where they'll be able to track all of these investments in a portfolio on KingsCrowd once we were able to get that up and running. So stay tuned for that as well, which I think is really exciting.
That's so fun. That's so fun. There's a reason that I've been telling every person who I've been teaching how to invest as an angel and start their own fund. There's a reason I tell them about KingsCrowd, every single one that's gone through this. We're talking hundreds of people who have gone through my process. So that's cool. Like the innovation is still there. You can still find new rocks to turn over.
No, absolutely. And I know you hit on this a little bit, but all of these companies that are going to be going into this fund, they'll have the opportunity to raise additional capital from this new fund that you're raising, correct?
Yeah.
Obviously, they need to hit their performance metrics and what have you.
Absolutely. Yeah, it's a later stage fund, but hopefully this is just the beginning. The op fund, the 30 million one, is hopefully just the beginning of a suite of funds that serves people who are getting in. So this is the fund you and I are working on, and the KingsCrowd and Backstage are working on, is like a lane of entry into what is hopefully a long freeway, trying to make sense with the same analogy. But yeah, it's an on-ramp for a lot that we have planned.
Wonderful. Well, Arlan, thank you so much for your time today. For those who are interested, we'll be sharing more information with you. We'll have the links in the podcast. And you'll, again, if you're accredited, very easy to sign up and fund your investment. We'll also provide an opportunity to speak with our CIO if you just want to learn a bit more about the details and mechanics of how the fund is going to work. And we'd love for you to be able to join us on this journey. But Arlan, thank you so much for your time as always. Really appreciate it and looking forward to this partnership.
Thank you so much. I can't wait to meet everybody who joins.
Thank you so much for listening to another episode of Inside Startup Investing. Before you go, if you enjoyed the show, please give us a like or a positive review on Apple, Spotify, or wherever you listen to podcasts. And be sure to like and share our latest episodes. And if you like what you heard and want to learn more about how we can help you manage your startup investing search, diligence, and management at KingsCrowd, check us out at kingscrowd.com. Thanks, and until next time, happy investing.